We're at the top of the hour and we're going to get started with this webinar because we've got a lot of content to go through. Good afternoon, everyone, and thank you for joining us. I'm Matt Dunne, founder and CEO of the Center on Rural Innovation. It is so exciting to see so many old friends who have joined us for this, as well as new people who are coming to join us for the first time. And it's going to be a great conversation. At the Center on Rural Innovation, our vision is that rural communities can build inclusive, tech-enabled economies where people and ideas thrive. We believe rural places have the talent, ingenuity, and grit needed to shape our own economic futures. Our Rural Innovation Network represents an extraordinary group of forward-looking leaders spanning 43 rural regions in 26 states. Over the past decade, we've seen our investments, our programs, and our research grounded in the experiences of our network communities demonstrate that innovation isn't just possible in rural America. It's already happening. At the same time, we all know rural communities are navigating real economic complexity, from workforce constraints and shifting labor markets to changes in business formation and investment trends. Actions to address these challenges are urgent, but too often decisions about rural places are made using outdated assumptions or incomplete information. Today's webinar is part of changing that reality, so we can all ground our strategies, policies, and investments in what the research and data actually show today. Our goal is to help rural leaders move forward with clarity and confidence and ensure policymakers and investors are right there with them. At CORI, we see research as a tool. We build data and analysis that help rural leaders translate insight into action, whether that's economic development planning, tech workforce strategy, or preparing for growth in an AI-shaped economy. In today's session, we'll share key trends shaping rural economies, highlight where momentum is building, and discuss what success looks like across different regions and community types. I'm grateful to be joined by the CORI research team and program leaders who are doing this work. You'll hear from my colleagues whose expertise and close collaboration with communities ensure this research is both rigorous and grounded. Thank you for being here to be a part of empowering rural America. And with no further ado, I'm going to turn it over to Dr. Amanda Weinstein, our Director of Research. Take it away, Amanda.
Thank you, Matt. And thank you for everyone showing up here to the 2026 State of Rural America as we look at the trends shaping what's next for rural America. I wanted to start off with looking at the national economic backdrop, right? So what this is showing you is it's showing you GDP growth over time. So what we're expecting in the year to come is we expect some pretty solid growth at about 2.4% for the nation. So what that means is we have recession risks that are easing, but they're not gone. And they're not gone because we still have a lot of economic uncertainty that's playing out in our economy. This is from trade policy, what's going to happen with interest rates, inflation, AI. There's still a lot of uncertainty, which is why we still have some risk of recession. Now, I want to break this out for what this looks like for rural America compared to non-rural America. And we have to start with, well, what does rural America mean? So when we pull the data here today, what I'm going to be showing you are data for non-metropolitan area counties. So if you look at this map, all of the green areas are non-metropolitan area counties. That amounts to about population of about 46 million people in rural America, which is about 14% of the population. And these green areas also account for about 12% of the businesses across the nation. So when we start to break out these numbers for rural America, right, what we can start to see is because we have that smaller share of the population at about 14%, right, a lot of those national numbers that you'll hear about are really being driven by metropolitan areas or non-rural America, right? So what you can see here is GDP starting with right before the Great Recession onward to see what those trends have looked like over time, right? And you can clearly see some diverging trends here between rural and non-rural America, with rural America lagging a bit behind non-rural America in terms of GDP growth. However, most recent figures suggest that rural America is growing at 4.6%, non-rural at 2.7%. So we actually have very strong GDP growth for both rural and non-rural America. So what I wanted to look at here is in rural America, when we break out those traditional rural sectors, tradable goods sectors, this includes farming, manufacturing, and mining that are all disproportionately located in rural America, what we see is that strong output growth, right? So that dotted line you see for each of these sectors is showing that we have increased output for farming, increased output for manufacturing, and increased output for mining. Now, when you look at that not dashed line, right, for each of those, right, what you see is a story of diverging output and employment, right, where even though we have strong output growth, we have stagnant and in some cases declining jobs for each of these sectors that is predominantly in rural America. Right, so when we start to look across the country, which rural places have high concentrations of these traditional rural sectors, right, on the left, what you're looking at is the high concentration of farming across counties in the U.S. All of those green counties you see are rural counties with a high share of farming. And you see a couple of those very dark purple counties. Those are metropolitan or non-rural counties that have a high share in farming. On the right, you're looking at that for manufacturing. So all of those green dots you see, those are rural counties that have a high share of manufacturing. And if we look to mining, you see the same thing. Those green areas there are the rural areas with a high share of mining, right? So what that also means as we look across rural America, there are a lot of rural places that are highly specialized in some of these industries, and their outlooks will be very dependent on those specific industries where we do see that gap growing between output and jobs. So then when we look at what jobs looks like from the Great Recession onward, right, we see a growing gap in job growth between rural and non-rural America, right? Despite having that strong growth in output and GDP, rural America isn't seeing the jobs go along with it. Right? So where you saw recently GDP actually higher for rural America, when you look at job growth for rural America is actually lower for rural America at only about 1% for our most recent data, where non-rural job growth is as high as 2.3%. Right? And we see this across these sectors, right? So on the left, what you're seeing are those tradable goods sectors. So that's your farming, manufacturing, mining, right? What you see in tradable goods sectors is you actually see stronger growth in metropolitan areas recently. On the right, you see tradable services. So tradable services are those knowledge economy jobs, right? This is where we have professional services. This is where we have our tech jobs. And what we see is much stronger growth in tradable services over time. We see across the nation, tradable services is adding more jobs than the tradable goods sectors that are in a lot of rural places. When we look at tradable services jobs, we also see they continue to tilt more towards non-rural areas. Those jobs aren't going as much to rural areas, leading to some of those gaps in jobs. We also see nationally over the next year, we expect a continued cooling of the job market, right? So what that means is we expect to see more of this low hire, low fire environment where businesses are responding to the uncertainty we have at the national economy by just kind of waiting before they make a lot of moves. So when we look at what tradable services looks like across the nation, right, we see a different picture here when we look at this map, right? When you see all of those very deep purple dots, what those are metropolitan areas with a high share of tradable services. The green areas are the rural areas with a high share of those tradable service jobs that we see. And we see this across research. We see that today's shift in services really seems to benefit large incumbent cities most. So when we start to think about, all right, how do places pivot into new industries? How do places pivot into these growing tradable service knowledge economy jobs, right? Here's where we look to those young firms, those new firms, those startups. This is really how communities diversify their economies, pivot into new industries, and it's how they adapt to changing economic circumstances. It's also where our job growth comes from. You can see in this graph for both rural and non-rural America, our job creation comes the largest share from those new businesses, those startups. So that means that entrepreneurship and those business startups are key to long-term rural resilience. And this is where we have some concerning trends, right? If we take a longer look at entrepreneurship rate, so what this is looking at is the rate at which we start new business. You can see this long-term trend of declining entrepreneurship across both rural and non-rural America, but you see the steepest drops for rural America. And this is actually a bit of a puzzle because survey after survey, when you ask rural residents, they are actually more likely to want to start their own business one day than non-rural residents are. So when we start to unpack that and see what's going on there, what we start to see is a lot of structural barriers limiting startup formation, right? So there we're thinking about the resources to help folks start and scale a new business. So when you look at some of the venture capital access here, and this is especially important for those new tradable service startups, we see that more than half of venture capital goes to just 5 metropolitan areas in the US. When we look at rural businesses, they're getting only about 1% of venture capital, which significantly hinders the ability of new businesses, especially in tradable service, those knowledge economy businesses. It hinders them from starting and scaling those businesses in rural America. But we do see some positive trends. We really see rural America as kind of like this emerging market, right? Even though we see venture capital disproportionately going to non-rural America, the growth is actually much higher in rural America. We see rural America starting to attract that venture capital for these new and innovative tech companies. Rural America, in our most recent figures, the venture capital there has grown by an astonishing 53%. We see a lot of venture capital starting to go to those rural places where there are new places and new people with new ideas. So when we look more broadly at the economy, at investment funding, right? So we're looking at broader investments businesses are making in software, but also in their buildings. What we see is that a lot of investment outside tech and AI really remains weak. That's really that blue line that you see there. So the most recent trends, you see kind of declines or stagnation in that investment in other sectors. Any investment we see for the next year, we're expecting is really to be continued in the tech sector, in AI. We expect it to continue. Right? So this is where we also have some concerns in these trends, right? I showed you where we have this growing gap between output and employment in rural America, where we have rural America producing goods but not seeing the same job growth. So if we have AI investment that only hits rural areas or too narrowly focuses on data centers, for example, without also seeing investments in AI skills and startup support for new businesses that are leading in these innovative AI type sectors, right? We could see a continuing of that widening between output and jobs in rural America. So what we can see is because of this continued investment in tech and AI, we see continued job growth in these tech jobs. In 2025, our most recent stat for this, we see that tech jobs increased by 5.5%. If you look at the top 2 fastest growing jobs from LinkedIn, the top 2 have AI somewhere in that title. You're looking at AI engineers, AI consultants, or AI strategists. Right? So when we break that down and to look at who is getting these jobs and where are these jobs being posted, when we look, rural America accounted for only 0.3% of AI job postings, right? So this really reinforces some of the trends that we've seen here, making sure that we need to adjust these trends to make sure that those jobs are also going to rural America. So we want to break this apart into different regions. We know that rural America is not a monolith. And one way that we can start to look at differences across rural America is to look at these different regions. So what we wanted to do is break this into different census regions and look at the rural West, the rural Midwest, the rural Northeast, and the rural South. And when we break it out into these different rural regions, we do see some significant differences in trends here, right? So if you look at that job growth here from the Great Recession onward, we actually see very strong job growth in the rural West. Where we see stagnation in jobs are those other regions of the country, right? And if we look at and unpack what's going on in the rural West, we can see their strong job growth is being driven by one, amenity migration, with folks continually moving in there and increased population in those rural areas, and also their industry mix. So this is looking at population over time. And what you can see here is the rural West has seen a very steady kind of drumbeat of population increases. We see folks continually moving to the rural West and those populations continuing to increase. Now, we see a different trend here if we look at the rural Northeast. The trend we see with population here in the rural Northeast is really a COVID story. The surge in population that happened in the rural Northeast was really a response to COVID. And if you look at surveys of people moving, what you see is 30% of those people moving say that they want to live in a rural area. So where this plays out, when we look at our migration data, we can see a small dip there for migration moving away from non-rural places, but that small dip for non-rural areas leads to a quite large spike here for rural America, actually starting before the pandemic. So if we look at what has enabled this shift, allowing more folks to live in rural America, it's really access to economic opportunities that they didn't have before, right? So one of these fundamental shifts is the shift in remote work. We can see for every rural region a big increase in access to remote work, but we see the biggest increases in the rural Northeast and the rural West. So when we look at this change in remote work over time, from 2014 to 2019 to 2024, right, you can see a very clear shift because of the pandemic happened, where a lot more people have access to remote work. You also see post-pandemic this gap emerging between rural and urban places of who actually has access to remote work. We've seen increases everywhere, but it's actually increased more for non-rural areas. And if we start to unpack what jobs have access to remote work, right, what we see at the top are all tradable service occupations, with the top being those computer and math occupations, which are tech jobs. We see tech jobs leading the way here, with 63% of them having access to remote work, which means that they can do those jobs from anywhere. Right now, you might be thinking from anywhere typically also means you have to have broadband to do that remote work, right? I am coming to you remotely thanks to my broadband. Same with you all at home or wherever you are streaming in from, right? That broadband is key, a key piece of infrastructure to make sure that rural areas have access to those remote jobs. And this is where we have seen a substantial closing of that broadband gap between rural and non-rural America. We can see here, this is showing you the gap in access to fiber, kind of the gold standard in broadband. And we can see significantly more access to fiber broadband for rural and non-rural America, or for rural America, with that gap between rural and non-rural America closing. And we know that that infrastructure alone, but especially when that infrastructure is leveraged, can drive job growth in rural America, and it can also increase the number of businesses. So when we look across these regions, right, this is also what we're seeing in the rural West, right? We see a trend where, coming out of the Great Recession, right, we see that decline in the rate at which we're starting businesses, and you see a pretty significant recovery in the rural West. Right? And this follows along with the research we know. We know that highly skilled workers are more likely to start businesses in high amenity regions, especially in the rural Mountain West. And we know that those rural entrepreneurs are able to kind of import wealth into their communities by starting those businesses. And they also tend to out-earn wage workers in rural America, so really supporting wealth creation in rural America. So when we look back at those two sectors that we talked about, those tradable goods sectors with manufacturing, farming, mining, and the tradable service, those knowledge economy and tech jobs, right? What we saw was that significant job growth is going more to non-rural America. If we look at wages, we see the same story here, but kind of magnified when we look at wage growth, right? So not only are tradable services creating more jobs, they're also delivering higher wage growth for the places that are getting those new and innovative jobs. Right? So what that means with rural America not getting as many tradable services jobs, we also see that gap continued between rural and non-rural America. We see that average annual wages for rural America is about $52,000 a year. For non-rural America, it's $75,000 a year. And we might be thinking, and I know some folks out there might be thinking, well, they have lower housing costs. But what we see in the data is that since 2019, housing costs are actually outpacing incomes fastest in rural America, right? That big migration shift you saw, the increase in population also pushes those housing prices up, and we aren't seeing incomes match the increase in those housing costs. Right? So what that means is that right, our lived experience for that economy is very dependent on our local economy, right? So when we ask rural residents, right, how are you doing? What is your outlook for the future, right? Surveys show that in the near term, rural workers are actually more confident about their job security, but they are less optimistic about this long-term career growth. Right? They're less optimistic that long-term they will have access to the economic opportunity that gives them good paying jobs in their hometowns. Right? So what this means is even though we see growth at a national level, so even though we see growth in GDP, what that means is we are living locally and our economic reality is local. Right? So then when we think about consumer sentiment, right? We see consumer sentiment increasing just a little bit at the end there, but we still see our consumer sentiment nationally is much lower than it has been historically, right? And so this is where a lot of our mismatch comes from when we're seeing, for example, the stock prices are doing well or that we have strong GDP growth. Right? When that growth isn't shared across our country, across rural and non-rural America, right? We should expect consumer sentiment to be low, right? Because our economic reality is rooted in our local communities. So when I think about, right, the big takeaways here, right, what does all of this mean for the coming year and what does it mean for rural America, right? So nationally, what we're going to see in the next year, what we would expect, we expect growth to continue, but the benefits of that growth are not necessarily universal. We see, for example, with GDP, that rural GDP has really rebounded, especially if we're looking from the Great Recession. But job growth and wage growth vary significantly. We see that lags in many areas and in many regions. And when we start to unpack what the reasons are behind this gap between output and jobs, what we start to see is there's a lot of structural barriers that are holding many rural places back, right? So this comes down to things like the industry concentration in these regions. Do we have access to the kind of support that these regions need to start new businesses, to scale those businesses? Do they have access to capital so that they have the funding that they need and also the support locally? It also means that when we have limited remote work access, so in some places, I know that I showed you that broadband gap has been closing, which is really impressive, but it hasn't closed everywhere. We still have rural areas that lack access not just to fiber, but to a lot of broadband, which means that those areas have limited access to remote work, which are jobs that are not geographically constrained, that can really be done anywhere. Right? So unlocking some of these things really can help unlock some of that gap that we've been seeing and help unlock being able to bridge that gap from getting more jobs and access to high-paying jobs. What we also see is really, I think, an optimistic story here that in a lot of places we see rural momentum growing. The West is a great example of this, with the rural West driving some of this momentum. And if we look at why the rural West is seeing a different story than some of the other rural areas, we see very strong amenity-led migration, with folks moving to the places where they want to live, where you have those natural amenities, that high quality of life, but you also have access to opportunity in those places. You have access to broadband and to a variety of jobs, these knowledge economy jobs, tradable services jobs, and a lot of folks are starting businesses in the rural West, giving them access to jobs, flexibility, and really a way to increase prosperity locally in their rural towns. So what I would like to pivot to next is really start to hear from some of the experts in workforce development and entrepreneurship, and hear kind of what all of this means for rural communities on the ground, right? What does this mean for rural leaders, for rural entrepreneurs, and for investors? And a lot of this, the conversation that we want to have on these panels is to think about, yes, nationally, we still have uncertainty. We still have uncertainty from AI and a number of different national things. But really, when I think about resilience, that resilience has to be local. When we're thinking about giving folks the access to opportunity to have those high-paying jobs and start their own business in their hometown. So next up, I would like to welcome our two experts on entrepreneurship. I would like to welcome Diego Rubio, our Senior Program Manager in Entrepreneurship, and Jay Bockhouse, our Chief Investment Officer here at the Center on Rural Innovation. Welcome, both of you. Appreciate you being here for the conversation.
Thank you.
Thanks,
Diego.
Amanda.
Awesome. Diego, I'm hoping to start with you. Can you tell us a little bit of what you do here at the Center on Rural Innovation?
Yes, so I am part of the entrepreneurship team, and our goal is to equip ecosystem leaders with training and capacity building methodologies to support their entrepreneurial ecosystem. We do everything from accelerator and incubator feasibility studies all the way to entrepreneurship programming, whether they are a nascent ecosystem and they are just starting their ideation sprints, to more advanced commercialization programming for their community.
That's great. We see that it's so important, right? What we just saw is how important entrepreneurship is and some of those really concerning trends. So this is really important work to get to the how, right? I can show you how important entrepreneurship is, but getting to the how is very important for our communities. Jay, I'd also like to give you an opportunity to talk about what you do at the Center on Rural Innovation.
Thanks, Amanda. So I manage CORI's investment funds. We've got a national fund that focuses on seed stage rural tech startups and providing access to capital to those startups. We also have a regional fund based in Vermont that focuses more on accelerator stage businesses. But basically, we're trying to provide that access to capital for startups in the early stage of their growth in order for them to be able to grow their business and provide compelling employment opportunities with resilient, higher paying tech jobs in rural locations.
That's great. We saw that it's doing such an important role in really trying to drive more access to venture capital in rural places across the country. Diego, I want to start with you. I think AI is still on everybody's mind here. We saw some of these trends going on with expectations of kind of AI investment is going to continue for this year. So how are rural entrepreneurs leveraging AI to overcome geographic constraints, and kind of what's working when it comes to AI for entrepreneurs, but what's overhyped?
That's a great question. We believe that AI is changing the game for rural founders because it knocks down the classic barriers people always used to point to when it comes to building rural tech startups. You heard it all the time, there's not enough people, there's not enough technical expertise nearby, not enough capital flowing for rural startups. But with AI, a small team can move way faster. It enables rural founders to do more with less. You can get help with technical work on demand using tools like Cloud Code. You can draft and test marketing methodologies quickly with an LLM or AI agents. And you can also build simple systems or even an MVP through methodologies like vibe coding and iterate without burning any huge budgets. So for a small rural founder team or even a solo founder, that's a big deal. What's working right now, what we've seen is just pretty practical things. Founders are leveraging and using AI to speed up customer discovery processes, building prototypes, and running more leaner operations. And what we've seen being overhyped is the idea that AI replaces the hard parts. AI doesn't replace the trust building with customers. It doesn't replace distribution or the go-to-market strategies. And it definitely doesn't replace the real customer understanding or, just magically creates a product market fit. It just helps, AI just helps move faster and with more information.
Let me just add on to that. I asked our portfolio CEOs a similar question, and where they're really getting a lot of value is within the tech team and software development. And what I was hearing was 3 to 5 times productivity in that sector. And where they're not getting much lift is on the sales front. So they've tried AI for customer leads and engagement, and that's still really a relationship segment where it doesn't have the same extent of value.
Well, that's so important, right? Those people relationships are still going to be important moving forward. And also, I love the points you brought about, we know one of the hard things about rural places is they have kind of thin labor markets. We know across rural America, we've seen rural America missing 80,000 tech jobs. And even though we've seen increases in those tech jobs across rural America, that those missing tech jobs mean it can be hard for a startup who needs those tech jobs. And so it's interesting hearing how, AI can help with providing some of that tech jobs, where now maybe you have the one person, filling the role of where maybe you needed more like 2 or 5. So I'm curious, Jay, what deal flow trends are you observing in rural markets, and are you seeing different types of ventures emerging compared to earlier years?
Yeah, I would say the pandemic was a real tailwind for rural tech startups. One, it just made the idea of remote work so mainstream that some of the barriers that rural had experienced in that regard have really been alleviated. The other element is we saw a big influx of tech workers into rural areas. Now that they could do their existing job remotely, there were some lifestyle benefits and other just wanting to get back home, where we saw a lot of interesting people move back into rural. So we have fewer barriers from sort of the traditional HR constraints that people have categorized in rural geographies. And we're seeing some pretty interesting growth coming out of those two trends.
That's such a good point. I know we talked about how a lot of movers are saying they want to live in rural places. And one of the things that I didn't include is actually in the article, they talk about how it's surprising that 30% of movers want to live there. But I know when you talk to the founders and when you work with some of the businesses, that what you're hearing is they do want to be in that rural area, that they just want to have that opportunity there in those rural places.
Yeah, I'll give one example, Amanda. So we invested in a business called Different Kind, which is it's basically a software platform for dental service organizations, where it helps them with their customer and patient experience. And that was started by a founder who was originally not from a rural area, but he had been a consultant in the space. And then during the pandemic, moved to Buena Vista, Colorado, which is a small town kind of towards the western slope. And he was able to pair up with sort of a local tech founder or tech employee that he had found, and was able to grow that business locally right there in Buena Vista very successfully. Were it not for the pandemic, that would probably not have grown in a rural area.
Yeah, I know one of the things that we've heard from some startup founders in rural areas is kind of this sense of community you get from being a founder in a rural area. Diego, I'm curious, are we moving toward kind of more regional approaches to rural entrepreneurship support, multi-county, multi-state? Are we seeing these kind of communities get larger for rural entrepreneurs? Or will it be more hyper local? Is it very hyper local to that town? Kind of what's happening in that space?
Yeah, I think we're moving towards more regional approaches, multi-county and even sometimes even multi-state, because of the opportunities that it presents itself for the rural and small towns. A region can share mentors, it can run more specialized programs, and simply create more paths for founders to find customers and funding. You can see that shift in what's happening at the state level. States are building more organized front doors. You see states like Oklahoma creating their first chief entrepreneurial officer, to reduce those barriers and make support easier to navigate. But regional doesn't really replace local. Local is still how founders most often get identified and pulled into the ecosystem. And in rural places, trust is what gets someone to show up. Most founders usually take the first step because the person that they know said, hey, this might be for you. So I think the best setup is a regional backbone with local connectors and supporters. Regional gives you that greater access and opportunity for scale, but local gives you that trust that founders need.
That's great. Wow. I didn't know about the Chief Entrepreneurship Office. I now think every state needs a Chief Entrepreneurship Officer to make sure these types of things are happening in places. Jay, I want to know, how do you evaluate the risk return profile of rural investments differently than non-rural deals?
So, on the rural front, our startups tend to be extremely efficient. So first of all, as you noted, only 1% of venture capital is currently flowing to rural areas. So when we're coming into a transaction, there's typically a more reasonable valuation just to start off with. So often the price of entry is lower. And then our entrepreneurs are able to do a lot more with $1 million than you can in Silicon Valley. So, Silicon Valley startup may consume that in a week. You give our entrepreneurs $1 million, they're going to make that last a year. So that sort of efficiency and resiliency is really strong, which has been helpful from an investment standpoint. I would say the flip side of that is our founders tend to have take a little bit more time gaining sales momentum and market penetration because their networks tend to be not quite as strong and concentrated as those more traditional technology hubs. So the path to eventual exit is sometimes longer. We tend to be okay with that because, again, our primary mission and what we're trying to do is create higher paying, resilient tech jobs. So we're not looking for a quick flip and to juice a high IRR. We're basically trying to create a profitable business over time that's going to be scalable and exciting for growth and create value within these rural communities. So it is a slightly different animal, but a pretty attractive opportunity in our view.
That's great. So one of the things I know, Diego, with these entrepreneurship ecosystems is they are really, you talk about, they're really rooted locally. They are rooted locally with local residents who are starting the business, and also kind of local anchor institutions. Can you talk a little bit about what role is kind of rural higher education institutions playing in rural entrepreneurship ecosystems? And are we seeing effective models beyond the typical kind of university incubator approach?
Yeah, definitely. I think higher ed can be a big asset in rural entrepreneurship ecosystems. And, a university or a community college incubator can be a great initiative. It gives the founders a clear place to show up and get connected. But higher ed can do a lot more than just run the incubator space. First, they can be that neutral convener. They're one of the few groups in these communities that can pull local governments, that can pull employers, lenders, funders and partners into the same room and keep everyone aligned and focused on what the community's entrepreneurs actually need. And secondly, they can offer hands-on support, not just one-off workshops. Think students and faculty helping founders and small businesses doing real work, helping them do market research, helping them do customer discovery, any prototyping or commercialization for any new inventions. And a good example of how higher ed can be plugged into an ecosystem is an example that we saw in Seward, Nebraska, with the Tech Builders Challenge, which was a hackathon style event we did in partnership with the local EDO and university. And the community brought on real problems. They sourced the community problems, and then students showed up as the problem solvers, and faculty acted as them being able to help them guide them during the building of the solution. And that's how higher ed should act, acting like part of the ecosystem, not just providing the space. So yeah, incubators are a strong initiative, but the bigger opportunity is higher ed being a steady partner that brings people together and helps, turn local needs into real startups and real innovation for their community.
Oh, I love that you talked about that hands-on experience. And I think I know even my experience with students is that they love that hands-on experience. And a lot of rural residents have more interaction with local businesses, whether it's, their aunt or their uncle that has a local shop on Main Street, and they want to see that hands-on experience with that business because it matches what we see in surveys that rural residents, rural students included, are more likely to kind of want to start that business. Jay, so I'm curious. Are you seeing rural entrepreneurs who've gained skills through non-traditional pathways? Are they successfully attracting investment? And I would love to hear more about kind of what are these businesses that they're starting?
Yeah, I'll give a couple of examples. So we recently invested in a business called Fast Forward, also a Nebraska business, Kearney, Nebraska.
Nebraska representing well today.
Yeah. So it was founded by a gentleman named Dusty Burge, and Dusty had worked in the energy space, but nothing really to do with entrepreneurship. He worked for a large company, but wanted to go home. So he went home and founded a business. There were a lot of utility lines where he lived, so founded a business with a drone company that inspected utility lines. It was a good business. He ended up scaling that business and selling it pretty attractively. But he was always very disappointed that he couldn't basically cover more volume of line. So there was a tech meetup, a local tech meetup, where he got to know a computer vision expert. And they came up with the concept of mounting thermal cameras on top of automobiles to basically drive and inspect the lines at high speed at night when you could see sort of the heat of the imperfections within the lines. They're doing great. They've doubled revenue every year for the past 3 years. They just raised $3 million to continue to grow the business. And this is he's shown he can build a business and exit it. He wasn't a technologist or an entrepreneur by training, but has really come into this second venture and hit the ground running and is doing a great job.
That's such a good point. And I think what we don't think about when we, hear that stat of, more than half of venture capital is going to just 5 metropolitan areas, right? That means we're investing dollar after dollar in the same people and the same places expecting new ideas. And what I love, talking with you both is hearing about those founders and hearing about the new ideas that are solving issues that rural residents are facing, that rural places are facing. And a lot of them other places are facing too, but they're really grounded in those rural communities. And I think about like what those tech startups do is like solving the issues for rural areas. So I'm curious, last question for both of you before we move on to workforce, right? So beyond capital access, what are your big takeaways? What can we do to help spur entrepreneurship in rural places, to help rural residents start the businesses that they want to start?
I can take a lead on that.
Go ahead, Diego.
Yeah, so I think the biggest constraints are the ones that affect whether a founder can build a company day to day, first is the connective tissue of the ecosystem healthy? Rural ecosystems are less dense, so connections don't happen by accident. So if you are building an entrepreneurship ecosystem, you are mindful of building intentional ways for founders to meet mentors, customers, and partners, through warm introductions or mentor networks, and making sure as well that quality of life constraints are on the table. As you mentioned previously in the slides, that highly skilled workers are more likely to start businesses in high amenity rural regions. That's a good reminder that people often move for quality of life and that they can now start businesses where they land. So if a region wants more entrepreneurs, it cannot treat quality of life as a separate topic from economic development and entrepreneurship development. It's part of the entrepreneurship equation.
Love that.
Totally agree, Diego. As you mentioned, Amanda, the average rural resident wants to start a business more than your average metro resident. But the barriers are greater. And one is the capital piece, but the other one is sort of the network and example piece. So having connections to mentors who have sort of achieved, their within their industry, serious accomplishments, and then seeing other founders who have also been able to grow businesses as an example. I think that's one of the potential real powerful elements of the Rural Innovation Network that we're building, is to be able to make those connections across communities, both on the mentorship side, but then also just being able to highlight examples of where this has really worked within a rural setting, so that other people can follow that lead within their specific specialty.
That's such a great point. Not just seeing what's possible, but what's already happening in a lot of places and how they got there. Diego and Jay, I want to thank you for joining us. And I would like to bring on Shaniqua Corley Moore, our Tech Workforce Director now. Thank you, Jay and Diego. Shaniqua, welcome.
Hey, Amanda. Happy to be here.
I would love to hear a little more. If we can start off just with a quick introduction. What do you do at the Center on Rural Innovation?
Absolutely. So I help lead our national tech workforce strategy along with some capacity building in helping our rural communities either design and build self-sustaining tech talent ecosystems. My team and I work to assess all of the local assets that are in a community along with their gaps. We convene all different types of employers and educators, and I've seen a lot of things in the chat around K-12 library systems and all of that. We bring all of those individuals to the table to help provide that technical assistance, that provide where we can install the different systems and feedback loops that are needed in order to align what that training looks like for the real job demand. And our goal ultimately at Center on Rural Innovation is to transfer that ownership back to the community so they can sustainably train, place, and retain all of their local tech talent without having to divert their resources.
I love how you talked about, thinking about all of those kind of anchor institutions and those really community assets. And it's really an asset-based approach to thinking and working with communities about what can we use that are assets so we can kind of bring in the fold into this ecosystem. So I know we were just talking with Jay and Diego about kind of the entrepreneurship ecosystem and building that up. What do you see as the relationship between successful tech workforce development and the broader entrepreneurial ecosystem?
Yeah, I think that's an excellent question. And I think the relationship, honestly, is deeply interconnected. When tech workforce development and entrepreneurship are aligned, I think that creates a virtuous cycle of innovation and local growth. Here's the simplest way that I can explain it. I feel like the talent is the oxygen for entrepreneurship ecosystems. You have startups who need builders, developers, designers, analysts, all of the thinkers that produce that that tech talent can produce. And without that steady supply of skilled people who can turn ideas into actual real products, startups tend to struggle to launch and to scale. And so, thinking about this on the workforce development side, we tend to fuel that entrepreneurship by growing that talent supply and creating clear local pathways to those tech careers, which also improves the retention because people can advance without having to leave. And at the same time, a strong entrepreneurship ecosystem strengthens workforce development by sending clear signals about in-demand skills and providing real-world learning such as internships and apprenticeships and project work that is actually tied to those different types of startup needs. And to close it all out, I think that the feedback loop, it matters because the training without the demand can ultimately drift, and an entrepreneur or entrepreneurship without the talent, it cannot scale. And so this ultimately becomes that capital effect that pretty much Jay was talking about earlier.
Oh, such a good point. And I love how you're talking about, and, same with, Diego and Jay, all of these ecosystem pieces, that it's all related, right? Our workforce development, our entrepreneurship, quality of life, all of these pieces are related and kind of need to be functioning and working together. So I am really curious. We talked a little bit about AI with Jay and Diego. How do you see AI changing workforce development in rural areas?
Yeah, so AI is changing the rural workforce, less by, I would say, by replacing programs and jobs, and more by turning thinly staffed systems where we know everyone in rural wears multiple hats into that higher capacity and providing that opportunity for having more productivity, while also raising the bar when we are starting to think about, or when employers are starting to think about what job readiness means. And so a prime example here is where there was a rural career center in Wilson, North Carolina, where they are utilizing AI almost like a co-pilot in order to help them with drafting outreach, simplifying instructions, summarizing notes. That way they're able to spend more time with the people than on the actual like hand-to-hand paperwork that tends to almost weigh down an employee that's behind the scenes. And I would say on whether or not AI is going to make life a little bit easier or harder, I would say it comes with judgment on whether we are going to tend to look at accuracy, privacy, and quality when it comes to utilizing AI tools, especially in the rural space.
Oh, such good points about kind of productivity. And when we're thinking about, AI skills and all tech skills and all workforce development training, right? It's coming down to make sure that, rural workers have access to the skills and abilities that make them more productive. Also love hearing it can replace some of the paperwork stuff that I think nobody really actually enjoys doing. So I loved hearing about all of these pieces. I'm curious a little bit more. What's the role that rural employers play in tech talent development versus kind of expecting a workforce ready candidate, especially given these smaller labor markets?
Yeah, I think honestly, this question is very critical because our rural employers are operating in such smaller labor markets, especially in rural. And so they face honestly, a strategic choice. They can either compete for the limited supply of workforce ready candidates, or they can start to help grow that supply of capable talent right where they are. And I want to be very direct when I say this: in that small labor markets, the wait for the perfect candidate is a strategy that is not sustainable. It's not sustainable in our rural markets, and the talent has to be made, not found. And so one of the things that I constantly like to amplify when I'm talking with an employer is, first, we have to think about how we're shifting expecting workforce ready candidates to adopting that shared responsibility model. And so that means that employers do not do everything alone, and that they are taking that active role alongside educators, workforce boards, the community partners. And then secondly, they're looking to hire for potential and then build that proficiency. A lot of the roles that we see, especially in the entry level and middle skill roles, they can be filled by candidates who have the right mindset and the foundational skills, but they are going to need to be able to come up with that 30, 60, 90-day plan to help that candidate ultimately help that company reach those real milestones. And also that helps with assigning a proper mentor to those individuals as well. And so treating this work based opportunity as more than just the pipeline, also looking into how can they pilot internship opportunities, apprenticeship opportunities, where they're utilizing any sort of paid project experiences for the ones that are trying to come in. And then last but not least, I think employers, honestly, they have to be able to co-design and not just feel like they are the consumer, especially in rural communities. It is a strategy. And so when employers are investing and developing that talent, they are reducing that vacancy time and they're improving what that retention can look like for their culture.
Oh, so many good points there. I love that you were talking about these kind of non-traditional pathways, which we know are especially important for rural workers who face additional barriers. But I also just want to rest on the point that talent has to be made, not found. That is such a great point. I think it's true with talent and with businesses, that talent and businesses need to be made and not found. And what rural places need are the strategies to help make it and help make it possible in communities. So before I let you go and bring on our last guest, Drew Rosebush, I'm curious, any final thoughts on what do rural communities need to help, make that talent?
I think to make that talent, it starts with that flywheel of growing paths creates sustainability, and having that flexibility in rural communities along with that community connection that's going to turn that job into that future for any individual that's in that community that's looking to stay.
Oh, such a great point. Shaniqua, thank you for joining us. I would love to bring on our head of data products now and our data team, Drew Rosebush.
Hey, thank you, Amanda, and thank you all for joining us. If you've enjoyed today's presentation and would like support navigating these uncertain times, we encourage you to check out our data tool. This tool delivers economic data and insights tailored for your rural community. The QR code you see on the screen here will take you directly to the tool, and our resource page we'll be sharing out after our presentation. If you would like to stay up to date on CORI's work, feel free to sign up for our newsletter, and we hope to see you at a future CORI event.
Thanks, Drew. I know we shared a lot of great data that you and your team helped put together for this presentation, and I know communities are just wanting more data. I know you and I are big data fans, so we really wanted to leave everyone with, if you want data for your community, this is the place to get it, and we hope you stay in touch with us, and we hope to see you next year for the next State of Rural America. And thank you all for joining us.